Alrighty. The monthly candles are in, so let's do some recap of the sectors. We're going to start on Koyfin and do a normalized performance 1 month for each SPY sector. So at the top of the list this month, utilities did the best, which is surprising, but looking good there. Then we have technologies, the technology sector, industrial sector, energy, and consumer discretionary. So that is our top five. And then the bottom three are going to be healthcare, staples, communications, materials, and I think that's real estate. And then financials. Financials are flat, real estate pretty much flat, materials almost flat. Highest performer, utilities, and then technologies and industrials, surprisingly. I think year to date, industrials is the highest. Yep. So year to date performance for all the sectors, we have industrials, utilities, and technology. And then communications is actually top four for year to date. So just a rough month for that sector overall. And I believe that's because of Netflix sold off, if I recall. Hopefully that's bouncing here soon. And then financials is next. So quickly jump to TradingView and just go over the actual charts. So monthly chart for industrials, relative strengths are looking good, approaching the 70s bar. We want overwhelming buying pressure. You can see how long that persists when things get going. They continue to go, right? Asset prices trend. We know this statistically, so follow the momentum. MACD curled over and is looking to go higher. So then we can jump to go to healthcare, I guess, but healthcare looks terrible. Bearish, RSI, MACD's widening. I think it's just it's probably going to go to this lower range here, 120, 118-ish. That's what I would suspect, but we shall see. I think UNH is breaking down currently. Let's go to XSD. So this is semiconductors. Excuse me. Probably most important sector currently in this economy with AI narrative and all the other thieves going on. We are now out of the bearish RSI zone on the monthly chart. We're back to the territory we want to be, above 50. I like. So we could potentially go into the 70 range here, and we do have a lot of work for that to be done. So that's good news. The monthly candle closed above this resistance of 250. It is now support. Textbook reversal. Jumping to consumer discretionary. Also looking good. And I think Amazon's earnings were today, and they're not great. So this will hurt the sector. But the monthly candle did close before that, which we are green and looking relatively strong. This will probably putter sideways and then hopefully go higher. But overall constructive. Nothing to be too concerned about there. We talked that. Utilities, absolute monster candle. You can see there was a lot of resistance. It bought 2 whole months, getting bid under 83, and it broke finally higher. RSI again is bullish in this range and looking to go higher. Not looking great for the real estate sector. I don't like the RSI sideways. If it breaks down, you know what happens when we go lower, but we shall see. Overall, not a huge fan. I would not be looking in this sector for longs, in my opinion. Staples, similar. It is sold off. There was a lot of strength in the last year and some of 2024 in staples. And I think we were pivoting out of that. It has not been able to break out. And we're most likely going to go retest these lower lows, uh, lower ranges, and create some lower lows in the mid 70s. First target would probably be 78, 77, and we might even see the 75s. The time will tell on those. Second most important sector, in my opinion, is technology. We are absolutely ripping. See, did not even hesitate to go through prior resistance that we spent most of 2025 in. So this fantastic V-shaped recovery, and we are off to the races. Let's see what first target would be. 286 on XLK would be first target. We shall see. We are already peaking out into the monthly 70 range for RSI. This thing is known to go relatively high, though. Peak, it looks like, is 86 over here back in 2018. Industrials, another one looking really good. No issues get breaking through this prior resistance. Didn't even need to turn it into support. It's just going higher. Looks like 164 could be our first target. Everything's looking good from MACD perspective as well. Financials, a little bit of indecision going on. Not sure if this is because the Fed didn't cut rates or not, but you can see within this candle, we did break higher. We closed just above it. So this still is a good sign, overwhelmingly bullish, but not as strong as I would like to see it. I think we probably putter around the 50s or 52, 51s, probably stay above 51.32 this month, but it's unknown. I would like it to happen because we need financials to continue the bull market from a breadth perspective, in my opinion. Energy, this could be something that's sleeping. I think this is a massive divergence, and MACD looks like it wants to curl over here eventually, maybe 2 more months, but you can tell it's just doesn't look good. It's not something I would like to own. So, that 87 might give you 101 or 98, but the odds of breaking through that probably slim. We'll see. XLC, not as impressive as we'd like, but looking good still. We closed the month red, which is surprising. We do have this massive candle that ripped right through prior resistances and has now become support. So overall, still very constructive. Looks like RSI probably needs to cool off a little bit, and MACD will probably continue to slow. Materials, sideways, garbage, not interested. There might be some names in here that are good, but I don't like this at all. Um, Home builders are showing signs of life. I think this is really important if we continue to see the bull market continuation here. It does look like RSI is bouncing off that 50 back into the bullish area. So we had this nice run. You can see from here to here. Grab this. So like here to here, this nice little dip brought us all the way back up. And then now we're doing it again, maybe. So does that give us our 146 target? We shall see. That would be the best case scenario. Time will tell. It's definitely a risk on appetite in the sector if that continues to happen. Oil and gas equipment, not interested in this. It looks terrible. Would stay away. Biotechs, permanently range bound as they have been since 2020. Maybe they go test the top of the range. I still think they would reject, but who's to know? These are very rate sensitive and overall extremely speculative names, so it's not something I spend too much time thinking about. Another ETF I want to jump into is ARK. So ARK looks really good from a monthly perspective. We broke out of this huge base, ripped through all prior resistances, became pretty much null and void, and now we have support on this top wick of 68, and we closed green, so looking really strong. RSI is now you know, bounced off this 50, looking to go higher. MACD has an opportunity to break above 0 and hold, which you want to see. So I like this. How I would be playing this is start diving into the individual names in ARK and looking for similar setups in the chart. But I am definitely bullish in this area and risk on overall, and looking forward to what we're able to see in the next coming months. That being said, there's always opportunities to short in the market too. So just be cautious. Some things can get overextended really quickly, especially if we are pricing in future earnings. But that is all I have for today. Thank you guys.